Welcome to the preview to your upcoming workshop. My name is Josh Lilquist, host of Investing with Confidence and director at Online Trading Academy. We're going to go into the different techniques and concepts that you're going to learn about and be introduced to in the upcoming workshop. First, let's define a couple things. Let's define income and wealth. When you talk about income, that is cash flow from trading, which is the net gain on either a single trade or multiple trades after commissions. When you talk about wealth, that's the increase in value of a total portfolio of assets over time, which is basically subject to market fluctuations. So a lot of people say, well, which one is more important? Well, it's actually both. How do the markets actually work? The concept is actually pretty simple. You have buyers and you have sellers. Well, who are the buyers and who are the sellers? You have your retail investors and your institutions. Retail investors typically struggle, haven't been educated on how to trade and invest. Then you have the institutions, the banks, are always consistently profitable year after year after year. But they do things a little bit differently. If you look here, you can see that the retail investor puts all these different indicators on their charts. Well, if you look at the institutions, they keep things simple. They are buying at wholesale and selling at retail. So what do we want to do? We want to trade like that. So let's talk about your retirement account. Most of you probably have mutual funds in a 401k or an IRA. When the market goes up, you should be generating a profit. As markets go down, most likely you lose. But you're actually taking a bigger loss because the money manager is still taking that fee. Now what happens when the market goes sideways? Most people think, hey, I break even. You actually lose money because you're still paying that money manager in that sideways markets. As you know, this is a highly regulated industry. Before we go any further, let's go through our disclosures. As we know, there is risk in trading and investing. You can and probably will lose money at one point in your life. Well, the key is to manage your risk. So the concepts and strategies we're going to talk about here today, we're going to introduce you to into your upcoming workshop, which is why you need a three-part strategy for up, down, and sideways markets. Let's talk about the long position. When you buy low and sell high, obviously everybody knows that there's a profit there. So that's buying low with the hope for the price to go up to close your position. So buy low to open, sell high to close. Well, you can actually short the market, which is selling high and buying low. I get it. The concept doesn't make any sense. But if you think price is going to go down, you can open your position as it's high and close it after it's dropped and realize your profit. Because do the markets go up forever? Let's look at this for a second. In 2000, we had a crash of 50%. In 2007, we had a crash of 57%. Obviously, the markets are at all-time highs now, roughly about 120% rate of return from 2000. Well, what happens when the market goes down for people that have retirement accounts? They lose. Remember in the last section, we talked about shorting. There's a 50% opportunity as price goes down from 2000 and 2007. Let's just say an investor started at $100,000 in 2000. As prices went down, there's a shorting opportunity. Brings it to 150. As prices go back up, brings it to 300. As prices go back down in 2009, shorting again has an opportunity bringing it to $471,000. As prices soar from there, you have roughly a $2.2 million potential return. That's roughly about 2,100%. Well, we all know you're not going to get the 2,100%. Well, what if you got half of that? That might be a stretch. What if you got half of that? Can you see the opportunity that's there? So what do we want to do as investors? We want to trade like the institutions, which is swimming with the sharks. Think of those fish that are always right around that shark waiting for those scraps. That's us as the retail investors following those institutions. So we want to follow their footsteps. Think about it this way. You have an elephant walking down a beach. And you want to find that elephant? You follow those footprints, which is supply and demand in the financial markets. That's how the financial markets actually work. Back in the olden days, it was paper orders. So clerks would take orders and have buys and sells on their desk. Buys on one side, sells on the other side, current price in the middle. And as you would probably guess, if there's a bigger stack of orders, that's going to stop and turn price. So what has Online Trading Academy done? Flip that over to what that looks like on a price chart because it's all electronic now. So as there's more demand, price will go up. More supply, price will go down. And we'll introduce you to that concept in the workshop. Online Trading Academy, on their 25th year, teaching people just like you how to trade and invest in the financial markets. Most major cities in the U.S., Canada, Singapore, Dubai, Mumbai. We hope to see you soon.